Hello guys, what's up? We are going to discuss your RTP that is applicable for May 2025. There is only one amendment, technically no amendments at all. And for those of you who have been watching this also, remember if you guys prepared for Jan 2025, then this one particular amendment, that's all is applicable to you and there is no other amendment. Let us imagine you guys prepared for September, that is, I'm talking about 2024. There is no such amendments as such in corporate laws. So just watch this and go. There is absolutely no other amendment that you guys have to look out for. Okay, so now what is that amendment, sir? Only one amendment, people. What is that? If you guys remember, in chapter 11, that is foreign companies chapter, whenever a company comes and establishes a place of business in India, a foreign company comes and establishes a place of business in India, within 30 days of such establishment, we used to file to ROC, that is with the registrar, we used to file something called as Form FC1. This was a process, if you guys remember, which we have written out also. So we used to file this particular thing with the registrar. If you remember, this is what you would have written, correct? This is the procedure, we would have seen it in the class. Now, what is the additional things or what is amendment? In front of this registrar, just to write it as CRC. CRC stands for Central Registration Center. Now, I'll just give you what is the CRC and then it will be easy for you to also understand what is it. So, in every place, people, now whenever you want to incorporate a company, we used to file all our applications with registrar only. So the number of applications with the registrars started becoming so much, and registrar is also the point of contact for other work which is under Companies Act. If you want to do any other thing also, you will file it with registrar only, no? So what started happening was the pressure, the work, everything on the registrar started becoming more and more and more. So we started seeing a delay in the timelines. So the work was not as smooth as they wanted it to be. So with that, what did the center do? They formed a new department. That new department is called as CRC. And that CRC is called as Central Registration Center. So what is CRC, sir? CRC stands for Central Registration Center. So today, whatever we used to file it with a normal ROC, with regards to specifically with regards to incorporation and all, now that entire task has been delegated to one center that is called CRC. Now, no matter where you guys file an application, it can be Karnataka, Tamil Nadu, it can be wherever, to set up a company also. Forget about foreign company. Even for setting up a normal company also, the applications will go to CRC only today, to reduce the burden on the registrars in your state level. So with that intention, they introduced something called as CRC. What is amendment, sir? Wherever we used to have the word only registrar, it shall be substituted with, wherever we had registrar, it shall be substituted with registrar Central Registration Center. That's the amendment. Rest all is the same. Nothing else has changed. That only they have given explanation here. Clear? Okay, sir, and this FC form we used to file, no? That the company authorized signatory, they used to file it. For this particular thing, people, there is one more thing that is required. What is that? Whatever is the form FC1 you guys are submitting with the Central Registration Center registrar, it should also be attested by RBI. Meaning what, sir? Whatever are the forms you are submitting with the registrar, it shall also be certified, approved by RBI as well. Why, people? Simple. FEMA is also involved, right? Foreign exchange is happening. So whatever foreign laws are there, you have fulfilled everything. So to that effect, you need to get an attestation, approval from RBI, and that you guys can upload it with our registrar CRC. Yes. Sir, what if now I am coming under telecom? Then other regulator approval is also required. That can be TRAI. If imagine you're an insurance company, then Insurance Regulatory Development Authority can be applicable for you. So in such case, what we need to do, whatever FC1 I'm speaking about, this will be attested by RBI also and other regulators also. That is IRDA. Understood? Pakka na? Sir, what if no such regulator's approval is required? Then give a declaration that to my particular setup of a company, no declarations are required. You give an approval, you give a declaration to that effect. That is also okay with us. You either get a declaration from them or you sign that there is no such things required. Both of it works for us. Clear? All of you? That's all. That is this particular amendment. Done na? And nothing else is there. Okay. Next one, sir. There is a huge question they have given. Always, what do? I always tell you, whenever there is a case-based question, I don't know whether it is right or wrong, I directly go with the question. If at all I don't understand the question, then always try to do that. In MCQ, try to do bottom and then go to the top approach. Okay, well, let us see. According to the above case scenario, Baking Point Limited closed its register of members for 12 days in connection with issue of bonus. You're required to choose the correct option from those stated below as to the maximum time limit for which the register of members can be closed at any one time at a stretch by Baking Point Limited. Yes, people, you tell me how many days maximum can the register be closed for. The registers can be closed, people, for a period of maximum is 45 days in a year. At one stretch, people, 30 days. I think they're asking you at any one point of time. So at any one point of time, it will be 30 days. I think 30, yeah, C is the answer. Agreed? Yes. See, did the story made the difference? But never write like this in your exam. Huh? I mean, it's only good. But read this and then go up. Okay. Next one. Baking Point Limited declared issue of bonus to its shareholders. Which one of the following resources Baking Point Limited was not permitted to capitalize for issuing bonus shares? Consider the applicable provisions. See, we do not know what and all they utilized. Now, in such questions, it will become difficult. Correct? Okay. So, let us see the options only. The baking was not permitted to capitalize amount of 2 crore 10 lakh lying to the credit of free reserves. Okay. For issuing bonus was not permitted to capitalize amount of 30 lakh securities premium. Bonus, free reserve, securities premium is permitted for issuing revaluation of assets. Absolutely. Pakka. Technically, they are asking sources of bonus. One is free reserves, securities premium, and CRR. Obviously, revaluation reserve, you cannot utilize it. So, yes. Next one. It is evident from the above case scenario that Baking Point Limited closed its register of members for the first time for 12 days. How many days a company is permitted to close its register of members in each year? How many days? The answer is simple here. What? How many days? 45 days only, no? Yes, 45 days. Done. Simple one, children. Baking Point Limited issued bonus shares to its shareholders in a 1:2 ratio. Which of the following statements is true regarding the issuance of bonus shares? Bonus can be issued only if it is authorized. Remember, any time authorization in its articles is very important. If not, you need to first alter your articles and then only you can issue. Bonus can be issued without approval of board of directors. No approval is required. Must be issued in exchange of nothing. Yeah, is answer correct? Baking Point Limited declared a final dividend for the financial year 23-24 at its AGM. As per Companies Act 2013, what should the company do if a shareholder does not claim the dividend within 30 days of declaration? What will you do? You will open a separate bank account called as unpaid dividend account. So if at all within 30 days, if at all a shareholder does not collect it, then we will transfer that particular money to a separate bank account within 7 days of after expiry of 30 days. And that money will sit in that account for a period of 7 years. And that account is called as unpaid dividend account. Correct? Hello? Yes. As per the Companies Act, for how long must you maintain the books of accounts? 8 years. preceding the current financial year. So if at all I'm speaking from the year 25-26 point of view, I should not count this from 24-25. Like this, you need to go 8 years. Okay. Suppose now Baking Point Limited wants to appoint an internal auditor to review its operations and compliances. As per Companies Act, which of the following statement is correct? Remember, most of the people will say always it is chartered accountant who can be an internal auditor. Remember that it is actually a confusing one only. But for us in class, I've clearly written it can be a chartered accountant, cost accountant. The most tricky part is this: any other professional can also do it as decided by the board. To be very frank, turn towards the east and say thank you to the person who said the paper. They did not make the question tricky. What if they are specifically asked, can a CS become an internal auditor? Can he? That's a question to you. You let me know the answer in the comments. Okay. Next one, independent MCQs. Let's see our logic works. As per LLP Act, choose the correct option if fails to see. If XYZ LLP fails to appoint a second designated partner within the prescribed time, what will happen? Generally, what happens, people, you need to appoint at least 2 designated partners. If at all at any given point of time, the 2 designated partners reduces below the minimum requirement, then you will be given 30 days time to fill the vacancy. If that is not done, every partner will be considered as a designated partner. Correct? Each partner will be deemed as a designated partner. Correct? Yes. Next one. Pranab, Indian citizen and a software engineer, was working for a multinational IT firm based in Singapore for over 8 years. During his tenure, he accumulated substantial savings in Singapore bank account and invested in few properties. With a plan to permanently return to India, he decided to sell one of his properties and transfer the proceeds to his newly opened bank account in India. Simultaneously, Pranab's employer deputed him to India for a critical software development project for 3 years. Effective from Jan, his salary was credited to his Indian bank account. Now, Pranab wishes to transfer his proceeds from selling his property in Singapore to his bank account in India. As per blah, 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 blah. If you remember, people, in the class only we had seen one exception. What? This particular FEMA rules will not apply. If at all you have acquired any capital account, basically any property, when a person was a person resident outside India, with that money, if you have purchased any property, now if you are selling that property and bringing back that money, then absolutely this FEMA rules will not apply. You are free to bring as much as money you want. We don't have any restriction as such. Yes or no? Okay. He can freely transfer the funds if the property was purchased while he was a person resident outside India. So you earn from the money there. So we don't have a problem. You absolutely do it. Kanika Tripathi, an accomplished classical dancer, has been invited by Oxford University to perform at a cultural event. She seeks to withdraw USD $75,000 for tour expenses. What is the most likely restriction on this transaction under FEMA and its guidelines? Remember, they are trying to confuse you. They are trying to say this as a Schedule 2 transaction. They are trying to confuse you. What if a person wants to go to cultural tours? Do you want to take central government approval? People will think on those grounds. It is not that a person is going in her private interest. She is not organizing a cultural tour. That's why they have clearly given tour expenses. It will come under LRS only. So you can withdraw up to $250,000 without any problem. It will come under LRS. Yes, remember, a little, probably a little confusing, but I think it's still manageable. Grab Limited, an unlisted company, intends to make a public offer of securities. However, they are not sure about the compliance requirements for issuing securities in dematerialized form. You being an expert, guide Grab on the relevant provisions. Lottery. They're directly asking you what is the relevant provision. I think a landmine only. But yes, it comes under section 29. The public offer of securities must be mandatorily in dematerialized form. And rule 9A. These are the two rules. So So a public company which is coming up with an IPO should mandatorily do an IPO by a dematerialized form. It can never be in a physical shares. So dematerialization is the procedure. That's the provision. Section 29 and 9A, Rule 9A. Chennai Limited is a company with an authorized share capital of 20 lakh equity shares of 100 each. At the AGM, the shareholders proposed to reduce the face value of each share from 100 to 10, which increases the number of shares from 20 lakh to 2 crore. Keeping the total authorized share capital unchanged. Analyze whether request of the shareholder is considerable, and if so, how the company can alter its share capital as per the provision of Companies Act 2013. Yes, people. So is it possible? Yes, sir. The section is section 61, alteration of share capital. Can we do it? Yes, possible. Section 61, subsection 1, clause D. Can we alter it? Yes, possible. So we can subdivide from 100 to 10. Is it possible? Yes, possible. We can do it. So remember, 20 remains the same. I mean, the total overall number remains the same. So it was 20 lakh shares of 100 each. Now they want to make it to 2 crore of 10 each. Basically, the amount 20 crore remains the same. That will not change. Is it possible? Yes, possible. How do we do it? But remember, whenever there is one is 61, you will refer. Next one, whenever there is a change in your authorized capital, it should be intimated to the registrar as well. So intimate that. Next one, because authorized capital is changing, the capital clause in the MOA will change. So you need to also write a reference for section 13. I repeat, section 61 speaks about alteration of capital. So if you guys are writing in your answer, in your provision, the first paragraph, you'll be writing about section 61. It is possible. It comes under alteration of share capital. Next one, intimation to the registrar. Next one, whenever there is a alteration of capital clause, MOA changes, and hence you need to alter the memorandum of association as well. That will be the procedure. Next one, Excel Private Limited received 50 lakh from Mr. Giver. Mr. Giver was a director of the company at the end of the transaction. However, Mr. Giver did not submit any written declaration stating that amount was not given out of the borrowed funds. Okay. The company utilized the said funds for business expansion and disclosed the receipt of money in the board's report. Considering the provisions of Companies Act, assess the following situation. Was Excel Private Limited compliant with the requirements with respect to acceptance of company? Answer is no. I hope you guys by now understood what is this. They are asking the question directly from deposits. In the class, I would have told you 100 times how they will ask the question. They will never ask you to write the definition of deposits. This is how the question will come. So what is the answer? Whenever a money is given by the director, you need to get a declaration from him that the money is given from my own funds and it is not from borrowed funds. Has the company taken declaration? The answer is no. So was there a non-compliance? The answer is yes. So what will we treat it as? If there is no declaration, whatever is the money given people, we will treat that money as what? Deposit. Is it considered as deposit? The answer is yes. Clear? Done. Madan Private Limited is partially owned subsidiary of Puri Limited, holding 90. Madan is a partially. Madan is a partially owned subsidiary of Puri. Okay. 90%. Okay. The company does not have any listed securities and is not in the process of listing on any stock exchange. Okay, it's not listed, it seems. The holding company prepares and files CFS with the registrar. Okay, holding company has filed CFS, it seems. Okay. Considering the above, analyze and examine the following situations. Is Madan Limited required to prepare its own CFS? What are the requisite conditions for the same? Should it prepare CFS? How does it matter if Madan had securities listed on a recognized stock exchange? Okay. So remember people, they are asking you from CFS, Consolidated Financial Statements. So CFS, what is CFS? A company should prepare consolidated financial statements of its company, of its subsidiary companies, associate companies, joint ventures. So, should Madan company, should it prepare CFS? The answer is no. As long as there was some exceptions. What is it? Which companies are not required to prepare CFS? If at all the company is not in the process of listing, or if it is a subsidiary or a wholly owned subsidiary, then all its members have given no objection. Meaning what? In Madan, who is its members? Puri. And Puri holds only 90%, but all the members have to give no objection. So whoever are the other class, the shareholders, 10%, rest of the people, they should also have given a no objection. And if the intermediate or the ultimate holding company, if they have filed CFS, then Madan company need not file CFS. So in this case, whether what are the requisite conditions for the same? That is the requisite conditions. Not in the process of listing, wholly or partially owned, all members have to agree. And the next one was what? Ultimate or intermediate company has filed. So in the second case, if it is listed, will anything change? The answer is yes. Listed company means you have to file. Okay, next one. ABC Private Limited is a OPC incorporated in 2024. The company has not appointed a company secretary due to its small scale operations. At the end of financial year, the company needs to file its annual return. The director, in state of the dilemma, consulted the company law expert whether they need to submit a full-fledged annual return or an abridged version and who should sign the document. Based on the provisions of Companies Act, advise on the following. What form should ABC Private Limited use to file its annual return? Small companies and OPCs will file MGT 7A, annual return, section 92. Who is authorized to sign annual return? Generally, it is CS if appointed. Because it is OPC, if CS is not there, then just one director can sign. Sufficient. Done. Next one, Measures Sharma and Associates is an audit firm with two partners, Mr. Sharma and Mr. Raj. Mr. Raj is also a partner in another audit firm, Mehta and Associates. Measures Sharma and Associates was appointed as a statutory auditor for Bright Future Limited, listed company on which provisions related to rotation of auditor apply for 2 consecutive terms of 5 years. If Bright Future Limited now wants to appoint Measures Mehta and Associates as its audit firm, can it do so? If not, when will the restriction be lifted? Can it appoint a rotation of auditors apply people? This is nothing but common auditor provision, common partner. Can I appoint? The answer is no. If at all there are two firms, let us imagine there is ABC and CDF. These are two common partners. If they have completed their tenure, even another firm with the same partner, common partner, they cannot be appointed. Cool off period will be 5 years only. 5 years. 5 years. 5 years. Clear? Okay. In LLP, based on the given what is considered as small LLP people? Contribution not exceeding 25 lakh and turnover not exceeding 40. So if Jeet LLP wants to expand its business, where is it done? Based on the given financial details, determine whether Jeet LLP qualifies as a small LLP under LLP Act 2008. Is it a small LLP? The answer is yes. What is considered as small LLP? What is considered as a small LLP people? You need to satisfy two requirements, and the first requirement is your contribution part. In the contribution, we see that it shall not be more than 25 lakhs, and In the case of turnover, the turnover should not be more than 40 lakh. So in this case, what is the turnover they have given? 35 lakh. And what is this they have given? 20 lakh. Is it a small LLP? The answer is yes. If Jeet LLP plans to expand its business and projects and resulting turnover exceeding 50 crore, determine yes, people. If it is exceeding 40 lakh people, is it considered as a small company? The answer is yes, people. I mean, if it is exceeding 40 lakh, is it a small LLP? The answer is no. So in this case, it is 50 crore. Will it be considered a small LLP? The answer is no. But remember, why have they given this 50 crore limit? Because if you see the small company, small LLP limits, it says small LLP means an LLP who is not having a capital contribution not exceeding 25 lakh and not exceeding 5 crore and turnover 40 lakh not exceeding 50 crore. That 50 crore and 5 crore you should not take it. So to confuse you, they have given this 50 crore. You have to take it as 40 lakh only. Yes, sir. So yes, it will be considered as LLP. I mean, it will not be considered as small LLP. They will not get any exemption. General Clause Act, Mr. N is caught stealing a bicycle, and offence punishable under the Indian Penal Code. According to section 379 of the punishment for the theft was charged against him. Elaborate on the term imprisonment. Okay, little tricky when they have asked people. Generally, they will not touch this. They have asked you the definition of imprisonment, and a person has been caught stealing a bicycle, an offence punishable under IPC. So, which is again, you are imprisoned. You have done anything theft and all, it is a criminal offence. Yes, it can be imprisoned. So, they are asking the definition of the word imprisonment. Remember, the word imprisonment can be of two types, people. Imprisonment as per IPC, I am telling you. One is called as rigorous, one is called as simple. Rigorous means, people, there will be some hard labor involved. They will make you work. Simple means you will be arrested. You will not be working anything. So there can be two types. So in this case, whether he will be punished with rigorous imprisonment or simple imprisonment, it depends whether while he was doing this theft, did he hit someone? Did he create any damage to the other person? Is he doing it repeatedly? If all of that, then you will be given rigorous. If first time innocent, it will be considered as simple. A little tricky one, but yes. What is the meaning of and legal significance of principle generalia specialibus non derogant? Explain with an example. What is that, people? Whenever there is a general rule and special rule, whenever there is a conflict between them, always remember specific rule will prevail over the general rule. Agreed? Always. So whenever there is a specific rule, whenever there is a general rule, always a specific rule will prevail over the general rule. Example, Companies Act only, people. There is a banking company for which RBI Act is applicable, Banking Regulation Act is applicable, as well as because you are a company, Companies Act is also applicable to you. When there is a conflict between this and this, which one you will follow? You will follow this only. Next one, FEMA. Mr. Amrish has been admitted to a postgraduate program at a foreign university and intends to join soon. The annual course fees is approximately 3,50,000. Kindly advise his parents on how they can make the remittance for the fees under provisions of FEMA 1999. You need to transfer the fees to your school or college or university. Can they do it, people? The answer is yes. Remember, you can write this answer in two ways. One, if at all, because it is considered as a remittance from a parent and not from the child. If it is child, that is, I am only claiming it. How much can I do? Because it is going beyond 2,50,000 LRS. Should I take RBI approval? If the student himself is doing everything, then you need not, provided the university gives you the estimate of the fees. It says 2,50,000 is not sufficient. Beyond that, if you submit it to your authorized dealer, then RBI approval is not required. Or second one, if you are treating it as a remittance, that is a parent giving it to a child. I am transferring the money. You go there, I'll transfer this 3,50,000. It will be considered beyond my LRS limit only. So it is going beyond my $250,000 limit only. So you can take it in both the ways. If it is, you're taking it as a transfer, I'm giving it to the student is paying, then I will take it, it is going beyond my LRS limit. No sir, student only is, we are doing it as an admission. Then get an estimate from the university. If that is the case, then yes, it will not require RBI approval. After completing his studies, Mr. Amrish is employed by a joint venture of a foreign company in India. The company intends to send him on a deputation to handle business operation abroad. His family resides in India and he would like to know if he can remit his salary to support their maintenance in India. Advise Mr. Amrish as per the provisions. According to me, this question is a little wrong, people. They want to ask a question on resident but not permanently resident. Resident but not permanently resident. Resident but not permanently resident. What is this concept? A person who is staying in India for not more than 3 years is called resident but not permanently resident. And in such case, what they can do, basically what is that, people, a person staying in India, but he will not stay for more than 3 years. Whatever is the salary you are earning, the net of taxes, the net salary, you guys can transfer it to your home country. Basically, imagine it is foreign countries. You are free to transfer your money to the foreign country. That is allowed. In this case, they are asking, you're working abroad, can you send money to India? That is not the case of resident but not permanently resident at all. But I think they have given the question on that grounds. I feel, it is not right. It should be the other way around. Meaning he is an Indian citizen. His family has stayed abroad. He is working in India now. Can he send his salary abroad? The answer is yes. He will be treated as resident but not permanently resident. The answer is yes. Now I'll tell you why did I have to tell you this. Here, look at the answer. Mr. Amrish can remit his salary earned abroad to his family in India subject to the following. A person who is resident but not permanently resident in India is a citizen of India who is on deputation to the office or branch of a foreign company or subsidiary in India of such foreign company may make remittance up to his net salary after reduction of taxes. So see, a person who is resident but not permanently resident in India is a citizen of India who is on deputation to the office or branch of a foreign company or subsidiary or joint venture in India. In all the cases they have explained, they are explaining foreign. He is staying abroad. So this scenario will not come at all. And see here, as a person resident in the duration of which does not exceed 3 years is a resident but not permanently resident. No, he is not residing in India at all. He is residing abroad. So I don't think this is right, but they have given something. According to me, this is not right at all. Yeah, that's it. That's your RTP of your May 2025. I hope you guys were able to understand. If you guys have any questions, you guys please let me know. I'll take up that as my content for the next video. I'll try to serve your purpose. Thank you so much. See you all. Bye-bye.